Hi everyone, welcome. We're going to start promptly at 11, so we will just give it a couple of minutes and then we will be beginning. Thank you for joining. Okay, let's begin. So, welcome everyone to our Making Tax Digital for Income Tax webinar. We will be talking about what actually changes and why it matters. It's obviously something that's quite imminent and very important for everybody to have a good insight about. So we will be sharing as much as possible and opening the doors for a Q&A at the end. So just a quick intro. I'm Ashlee. I'm CMO here at Nordens. If you don't know who Nordens are, we're a team of chartered accountants and advisors, and we believe that accountancy and advisory should be proactive, commercially focused, genuinely helpful. And that is why we often put on webinars like this to make sure that our clients, our future clients, our brand partners all have up-to-date information about the what's what and the who's who. I will now pass on to Liz, our tax manager, to introduce herself.
Hi everyone, I'm Elizabeth and I oversee the tax department. I oversee both advisory and compliance, supporting clients with strategic tax planning while ensuring full tax compliance. And alongside with me I'm going to pass you over to Hollie, our cloud manager.
Thank you. Hi everyone, so I'm Hollie. I look after the cloud department here at Nordens. Our service we deliver is very bespoke. We keep clients up to date, compliant, at least monthly. Obviously, there's a lot of reporting and insights that come out of what we do. But another focus of what our department is about is efficiency, automation. So we're fully digital currently. We obviously use and implement a lot of different softwares to make sure we can achieve that. Yeah.
Thanks, guys. So for today, we are going to be talking about what making tax digital for income tax actually is, who it's affecting, when are the changes applying, who's exempt. We'll also be providing actual requirements for compliance, stuff like the deadlines, the penalties, just exactly what you need to know when you need to know it. And we can talk to you about the options of how we as a team can support you. And there are various different options that Hollie will talk through with regards to that. As I said at the start, if you've just joined, we will be doing a full Q&A at the end. So please, if anything prompts a question or you've got a personal situation about this that you want to discuss, please just pop it in the Q&A. If you don't feel comfortable putting it into the Q&A, you can send it to us after. But we will be covering all the questions at the end. So yeah. I will now pass on to Liz just to talk through what actually is MTD.
Thank you, Ashlee. So MTD is what we now call Making Tax Digital. And this is now for self-employed individuals and people that own properties. And it's a process that HMRC has now put in place for those individuals to keep digital records of all income and expenses. It consists of submitting quarterly updates to HMRC using their approved softwares. They do have a page on their government guidance website where you could view all the different types of approved softwares that you can use. And at the end of the quarterly updates or quarterly submissions is the annual year-end declaration. And this declaration replaces the current self-assessment return. So rather than that one submission that we do by the 31st of January, it will be quarterly submissions throughout the tax year and then a final declaration on the 31st of January. So again, what is staying the same? So compared to what we used to do, which is that one submission a year, it will now be 5 submissions. So during these preparations, how income tax is calculated stays the same. When you have to pay your tax by and how much you owe will stay the same. The types of income streams and expense streams should stay the same. The only thing that changes will be how many tax returns you would pretty much submit. But rather than calling them tax returns, there will be just quarterly submissions, and then the last return will be called the final declaration. So that's the only thing that will be different. So just a really quick recap. One submission, rather than one submission, it will be 5 submissions during the tax year. Now, why is this change happening? You're probably asking. Over at Nordens, these are our views, but I'm sure you probably maybe have your own speculation. But we think that HMRC's objective is to reduce common filing errors. So rather than an amended return during the after the tax year, maybe quarterly submissions will help reduce any errors that might be picked up later on in a brand new tax year. It's also a tactic, we believe, that could improve financial transparency and tax planning, simplify compliance for individuals and small businesses, also to modernize the UK tax system and encourage better record keeping and habits. So this is what we feel that could be the reason as to why this change is happening. Hollie, you might have some views of your own as to why this change is happening.
I think I do agree it is to modernise the system. I don't know if we're going to see it brought in over the next however many years in different areas as well, not just with individuals. But I think what a lot of questions I've been getting recently, and Liz, I don't know what your thoughts are, is do you think perhaps in the future it'll be something that they're doing to be able to collect tax quarterly? I think that's where everyone's mind is going. I don't know what you think.
I think, to be honest, right now, it could be something that could happen in the future. With HMRC, you can never say no. But I also think it is an opportunity for us as individuals to look at what we have been reporting. It's a scope as well for you to use to your advantage. Is there something I'm missing? Is there an expense that maybe I've missed out during the tax year that I forget to add in the past because of that one submission? But now you've got that quarterly update or quarterly submission, you're like, oh, I could pick this up now. I usually forget by the end of that year, or by the end of the year. But in the future, will they add tax payments? Possibly. I wouldn't put past them.
So I guess for right now, focus on the positives. This does give us an opportunity to look at our numbers kind of in more real time and spot any potential expense claims, things like that, that are a massive positive from a tax planning perspective. We can't speculate as to the bigger picture strategy as to why they've done this, but I do think there are positives to take from it.
Yeah.
So the people who are going to be affected by these changes starting April 26th, the new tax year, it is purely individuals. And it is, want to emphasize, this is all based on your turnover, so your takings, not profits. So it's people with rental income and sole trade income of combined, if you've got both sources, over £50,000. So this doesn't include anything extra like maybe dividends, pensions, employment. It is purely based on your rental income and your sole trade income. Obviously, if you've got properties that are jointly let, it is your share of the rent that goes towards that 50,000. And what we are going to see also is the next 2 tax years, we know the new limits. So they are dropping each year, obviously 30,000, as you can see from April 27. And then the following year is going to be 20,000. So we would assume that a great deal of our clients and everyone is obviously going to be affected come April 28 when that threshold is dropped.
When's probably the best time to start preparing if, say, I think that this is going to impact me in 2028? When would you start getting your systems kind of ready?
You want to make sure that you've got the systems in place and ready to go from not when that first submission is due, but from when that first period starts. There's absolutely no harm in being set up and going through the motions a month or 2 before, so that when you get into that period where you then become affected, you know what you're doing. It's easy. It's a system that you're used to. So yeah, just you can be set up, you can be using the software, so you don't have to do the submissions at the end of it, but definitely don't leave it to your first deadline. We're going to touch on the penalties and everything later, but yeah.
Nice.
Just to also add on to what Hollie just said, you can opt in. So there is that option to opt in early if you want to start to get into the motion of things, only because you know that, okay, by April 28, it's going to be applicable to yourself. So there is that option as well if you want to just get the experience of submitting to HMRC. But yeah, that's just a little add-on. In terms of who's exempt, so there is a long list of exemptions, and it is based on individual circumstances, but just a little generalized list. So we've got digitally excluded individuals, so maybe the elderly or disabled, or maybe your location. So this can cause you to be exempt, but you would have to apply for this. Individuals that do not have a national insurance number are exempt. Estates, trusts, and non-residents are exempt. Non-resident companies are exempt. Foster carers, and currently partnerships, but at a later date that could change. So just to be aware, those that are within a partnership at the moment, this could be applicable to you later down the line. What date that's going to come into play, we don't know that yet, but just I want to say, be aware that you will have to submit quarterly updates and a final declaration at a stage.
So just to recap, the main shift, obviously, that we've explained is from that one submission a year to your 4 quarterly plus your final declaration. The way you keep your records must be digital, so softwares have to be used for these submissions, and obviously that will do your calculations at the end of the year as well. But yeah, digital and 5 submissions a year are your main shifts here. We've got on screen as well the quarters, so everyone will follow the same quarters. Everyone's going to have the same period that they're submitting with the same deadline. They obviously start from the start of the tax year, so the 6th of April to the 5th of July is the first one, and then so on. You've got roughly just over a month from the end of that quarter to get your submissions. Your final declaration is exactly the same as it used to be. So the date it has to be filed is still the 31st of January. And the date that the tax has to be paid is still January plus July, if obviously you have payments on account too. If anyone's familiar with VAT, you will see a lot of similarities in the VAT filings and penalties and the quarters and the deadlines. The systems are very similar.
And similar to VAT, there is a penalty regime that's introduced alongside with the MTD submissions. So for every missed quarterly deadline, you will receive a point. So there's 4 points for 4 quarterly deadlines that you miss. And if you miss all deadlines, you have a £200 penalty fee to HMRC. And every declaration you miss at the end carries 2 points and a further 200 penalty fee. And these points can drop off. So for every submission that you submit on time, the points will then gradually drop off. So you just need to make sure that within a tax period that no submissions are missed, and anything that you have missed in the past, they're all submitted, and that will remove all the points from your file. And then in terms of penalty payments, this will of course be due to HMRC if you've missed up to 4 points, or if you've missed that final declaration at the end. So it's very, very similar to VAT for those of you that do VAT submissions as to how the penalties and the point system goes about. So what to do if you are impacted? So this would be to keep all your income and expenses recorded digitally. I have a couple of clients that have asked me about, okay, what if I pay something off by cash? Then I would say create an invoice to support that payment that has been received by cash or made by cash, because it again needs to be recorded digitally through HMRC's compatible software. Again, submitting quarterly reports by the deadlines that was just on the previous page. We would also send this over to you if you have any questions about that. And then there's a final declaration that is the same exact date that as the self-assessment, which is the 31st of January. And this will confirm all the income and expenses that you've made throughout the tax year. If you've noticed that maybe during the tax year, you've made a submission, one of the quarterly submissions, but there's a change to be made, you wouldn't make an amended quarterly submission. Rather, you will make that adjustment at the final annual declaration, which is at that 31st of January submission. And of course, you pay your tax based on that final annual declaration amount. And that's your 5 submissions down for the tax year.
So we're going to touch on obviously the process now of what, obviously we've spoke about what it means, but what we actually have to do off the back of this. There are, like we've said, many softwares out there that HMRC have approved. There's a list of them online. We're seeing banks bringing out their own softwares now. There's free versions, there's paid versions, but ultimately you need to get that source data, which is going to be your invoices, your rental statements, your receipts, your bank statements, into the software, which is then going to link to your HMRC account and is where your submission is going to go, basically. So it's about finding the software that's right and making sure that this is not adding too much of an admin task to you and your business. You need to make sure that we're looking at the softwares that are efficient, got lots of automations. They might link to your bank account, for example, because that's ultimately going to save you time. We have developed a couple of packages that we're going to offer to clients because we appreciate everyone's going to want support in a different way, at a different level. With our packages, there will be software setup, obviously depending on which package you go ahead with, but we will help you get that software set up. We will help training, whether that be just how to upload or how to submit. We'll help you link your bank accounts up, and we'll make sure that the information being submitted is accurate, is compliant. As a firm, if we are handling submissions, we are going to be using a piece of software called Dext. Dext has a lot of good features, so it does link your bank account up. You feed through them transactions on a day-to-day basis, so there's no manual import or anything like that. You can upload documents via their app, you can WhatsApp it to Dext. There's loads of different upload methods. It automatically gets extracted, etc. Your or our job is literally to categorize it and put things in the right places. The packages we have set up, we appreciate some clients might want to handle this themselves, and that is our core package. So clients can do their quarterly submissions themselves on whatever software they feel is best for them, they're comfortable with. We'll have some training materials available for a couple of those, but basically the clients will be responsible for doing their own quarterly submissions, and we will do that year-end declaration, obviously to advise on the tax amount that's due. We will do that across all 3 of our packages. Our mid-tier package is called Build, which basically, it's kind of a gap where the clients are still involved, but obviously we're there as a bit of a comfort blanket as well, just to make sure that you're happy with what you're submitting is correct. So on this package, a client would be uploading and categorising all their information themselves. We would give that a check over, advise if any changes need to be made, and then submit on your behalf, obviously once we're all happy. Advance is the package that comes with the most support. So on this, literally all a client is responsible to do is upload the documents. So link your bank account up, upload your invoices, upload your receipts, upload your rental statements as and when you receive them. Once a month, we'll be categorising, chasing missing information, etc., so that we can file those quarterly returns, obviously alongside the end of year submission. If you are going to be having us submit the returns, whether that be on the Build or the Advance package, whatever the client is going to be doing, whether that just be uploading or also categorising, we will be assisting in the setup and obviously training to make sure that you know what needs to be done. We have done our pricing around volume. So obviously, if you are a landlord, this will be based on number of properties. If you are a sole trader, obviously number of transactions that you're recurring every month, basically, whether that be in your bank account or if you want to go off invoices and receipts. And if you have both sources of income, obviously it's combined. We are aiming, I believe, by the end of the week to share around on an email. We're going to email everyone we believe is affected, plus I believe everyone from this webinar, a link basically, which you can put your details in. You can see the different options of the different packages and the cost to you for them. If once you receive that, you are happy with the fees and you know what service level is right for you, and you're an existing Nordens client, it's going to be quite a simple process. We obviously are going to set you up with the software you need. We're going to jump on to calls and everything like that to make sure you have the training and the setup from us. And then we go basically. So April will be the first month. We are doing this on a monthly basis, not a quarterly basis. And our recommendation also is if you are going to do this yourself, you do it on at least a monthly basis, because we don't want that mad rush every 3 months basically. So yeah, and we will then set you up. First month will be April. You do what you need to do as per the package you're on. We do what we do, and then off you go.
So alternatives, if you feel like, oh, MTD is a little bit too much to handle right now, there's so much going on, there is the option of setting up a company. Now, the company method would mean that there is no quarterly submission and that final declaration at the end. However, you do need to be aware that you've got the corporation tax and the dividend rules that would apply when you want to take out money from your company. This could even be more tax advantageous for yourself. So it's something that we could always look to do for you. With every individual, it's very specific to their circumstance. So it's dependent on how much income you receive, what rate band rather you fall in. If you currently fall in the higher tax rate band, then maybe the limited company option is beneficial for you. So only switch if it makes it more of a commercial sense for you, not just to avoid MTD submissions to HMRC. And as I said earlier on, if you feel like, okay, by April 2028, it's going to affect me, you might want to think about opting in early. This is only just to get you in the process of submission so that you're aware of how much work it entails. If it's too much for you to handle, it might be something that you could give to us as an accountant for you to handle when you look at our packages. And then that will literally get you in the method of submitting those quarterly returns, and then the annual declaration at the end. It will also make you aware of anything that you might be missing in the background. As I said before, I feel like a lot of clients can use this as an opportunity. What expense have I not been putting through that I can put through? Something could have popped up during the tax year and you're kind of unsure about it. So it's your opportunity to ask, okay, I'm unsure, can I claim on this? You probably can. Or if you can't, then we can let you know. So it's something that if you don't know yet and you haven't utilized that option of maybe I can, this is where it could benefit you. Also, opting in, it builds a structure for you, improves cash flow. So you have a visibility of what is coming in and what is going out. You kind of have a rough idea of how much tax you might have to pay by that end of declaration, end of the tax year. So you just want to reduce your stress, and it's another option to reduce your stress rather. So if you feel like maybe you have quite a few properties that's on your self-assessment that you just want to take a look at a little bit early, this is the opportunity for you there. So that's options why you can opt in. If you do opt in and you feel like you want to opt out, there is that option as well. So bear in mind, if you opt out and you are meant to opt in by say I'll give you an example, you've opted in around April 2027, but you're not due to opt in until April 2028. If you opt out, say mid-year, that's completely fine, but just bear in mind you still have to opt in. Well, not opt in, but it's compulsory for you to be on MTD by that April 2028 period.
Can I just add something to the end of this as well? I think it's important as well, these sole traders and landlords, yes, you are going to be doing your figures on a monthly or quarterly basis. You're going to get so much more insight that you might never have had either before. You're now going to have these reports. You can see your turnover, you can see your costs, you can see month on month. So there is the insight and the information which should drive like decision making and things like that, which these type of clients who've been doing a once a year self-assessment have never had before. So there is that benefit to it as well.
Yeah.
Okay, I'm now going to open the floor to questions. I've seen a couple that have been put in the chat and a couple that have been put in the Q&A section, so I will jump between, but if we can try and keep them, probably go for the Q&A section, then that would be great. So the first question that's come in is probably more for you, Hollie. We're already using Free Agent for our company accounts. Can we set up a different username and continue with Free Agent?
Yeah, so if you already have your sole trader or rental on software, obviously you need to check software by software, but Free Agent for sure, they are going to have an MTD function within already. So obviously in them circumstances, you're doing the work that they are requiring from you currently anyway. It's just that extra submission once a quarter that needs to be done, and it absolutely can be done through Free Agent. It might be a toggle that you have to turn on within your account to enable it. But yeah, for sure, if you're already on a software, keeping your records up to date, you are doing what MTD is trying to achieve. You just need to add that extra step of the submission once a quarter.
Okay, and we've had a question. Does this stop the payment on account system and we just pay tax for the year in question?
No, so this would still, you would still have your payment account system in place for now. How it would look like in the future, I'm not sure, but right now there is still the payment accounts.
Nice. Okay, and how does somebody opt in voluntarily? Is it through HMRC's systems?
Yeah, so if you are, you would open up your own personal gateway. Once you open up your personal gateway, there should be an MTD, sign up for Making Tax Digital for income tax page on there. And then you just sign up as if you would, if it was compulsory for you. And that's how you literally opt in. And bearing in mind as well, if you do opt in, the penalties will be applicable to you as if it was compulsory. So if you miss a submission, you will bear that penalty point. If you miss 4 submissions, you will bear that £200 fine at the end. Okay. So just bear that in mind if you do opt in.
The next question is just with regarding partnerships. So what partnerships are exempt? Basically, at the moment, this person files separately, but they're considering filing with their husband as they're both sole traders, but they don't know much about that.
So right now, all partnerships are exempt. If maybe just understand the question a little bit. If you draft partnership accounts, but then you only do self-assessment returns, then you are and you are over that 50K threshold, then it's compulsory that you do MTD. However, if you do partnerships, you actually submit partnership accounts to HMRC, then right now all partnerships are exempt until further notice.
So this person sometimes makes over 50, sometimes under. So do you think they should be signing up to this from 26? Yeah.
That's right, yes. And also, it's not your combined income with your husband or it's combined income with anyone else. It's what is your share. So if your share is currently over that 50K threshold, then you would be making that submissions. If it's over after April, but it's under after, say, April 2027, you would still be making those submissions because the threshold would change anyway. So you want to bear that in mind. So from 2026 April, it's 50K, 2027, it's 30, and 2028, it's 20.
I guess, Elizabeth, if they're considering putting their income into a partnership instead, they have to genuinely open a partnership, file partnership tax returns, etc. Yeah.
Sorry.
And do penalties, Liz, still apply if you opt in early?
They
so
do.
If you're choosing to opt in, you still are putting yourself into that penalty system, the points-based system.
Exactly that. So if you opt in early, the entire structure, as if it was compulsory, would apply to you. And if you opt out, then it wouldn't apply, of course. But just bear that in mind. If you have a point, you do carry that point with you.
I suppose if you're opting in early to get into best practice habits, the idea is that you would be quite committed to hitting those deadlines, and
You're in
doing
the
as
scheme at
efficiently
that
as possible.
point.
Yeah, I think
Yeah.
because it's only going to benefit you in terms of, as we said, the tax planning side and the decision making side from getting into those best practice habits and avoiding those penalties where you can, where possible. I did actually read something online about if, for example, you've booked a holiday that falls after or during those submission deadlines, you can make, like, you can inform and then therefore adjust those submission deadlines. And there is quite a lot of information on that, which you can also share. So I think if it's absolutely not possible, there are ways to not get those points, I think. So another question that's come through is they need to join MTD in 2028, but they're retiring after that first year. Do they have to carry on filing?
Yes, I would say yes. Something would have to double check. Maybe you can apply for that 1 year exemption, but I think by 2028, because we would have been a couple of years into the practice of MTD anyway, it may just be compulsory for you to do that 1 year, and then you would come off MTD because you are retiring. But yeah, so right now I will say yes until there is that opportunity to apply for an exemption.
Thanks, Liz. And after the quarterly period and not using software, which sounds like a good idea, how long have they got to submit that period?
Say that again.
So after the quarterly period and not using software, how long have we got to submit that periods?
Well, the quarterly submissions have to be done on software. That's
Yeah.
not optional. And obviously the months run to the 5th. So the first one, for example, is the 5th of July. You've got 1 month and 2 days. So obviously the deadlines were on the screen, but it's just over a month after the quarter ends.
Yeah.
But all
Has
quarters
to be
must be
submitted.
submitted software.
Yeah. And to those who missed the first part of the webinar or some of the webinars, yes, the webinar is going to be sent out. So the recording of the webinar will be sent out following, so you can catch up on what you've missed. And that's no problem. That will be sent out to everybody.
Ashlee, there's a question in the chat, and I think I've had this from people frequently, so I just want to clarify that one, that the income you're reporting on a quarterly basis is just your self-employed and rental income. So everything else, your employment, pensions, dividends, that only goes on the final declaration. And when you're working out if you are affected by this, your 50,000, that 50,000 is only sole trader and rental. Your pension, your employment, your dividends don't go towards that 50,000 threshold. So I think that is an important one to emphasize, because I've had that question a lot where people have thought they've been affected based on their total income, but actually when you only look at their rental and their sole trader, they're actually not. And it's not based on profits, it's turnover. So rental income and sole trade turnover.
Nice, thank you. That's the questions that have come in. Obviously, if anybody's got any questions or they want to discuss anything with the team, please feel free to get in touch with us. If you're a client, you could get in touch with your CRM. Oh, there has been another question come in, so we'll do this last question and then we'll take further questions offline. So, Hollie, what would happen if this might be a Liz question. What would happen if the accounting year is different to the tax year? I.e. if you declare your accounting year as year end the 31st of August 25 and the tax year is the 5th of April 26.
So being that the question says accounting year, I'm assuming that means company. So if you're in a limited company, you don't have to submit MTD quarterly returns. If your properties are within your company MTD does not apply to you. If your properties are on your actual name and you're the legal owner and you submit them via your self-assessment, so this is your personal returns, then that's when MTD is applicable to you. So just bear that in mind as well, because I know some of our clients maybe have their companies, their property, sorry, within their companies.
Yeah. There's been a question come through on clarifying the exemption from trust income. We will send out a full list of all of the exemptions and what they mean in the follow-up email, because there is a lot there. There is a lot of different things, and some of them are temporary exemptions, some of them are permanent exemptions. There's a lot to it. So with regards to any exemption questions, we will send out the official kind of information, just because it will save us chewing your ears off about all of the exemptions for the next hour or so. I think we will call it time on that. If you've got any further questions or we've missed your question, please feel free to send it to us. As I said, if you're a client, send it to CRM, send it to, Liz, Hollie, myself, and we can filter through that feedback and those questions. If you're not, please feel free to get in touch via the contact form on the website, or socials. You can message us on any social channels. I hope you've found the session informative. Feedback always welcome. And have a great rest of your day, guys. Thanks, Hollie. Thanks, Elizabeth.
Thanks, everyone.
Thank you.
Thank you.